And good evening, everybody. This is Michael Filigera from logicalsignals.com, and I am going to be presenting tonight's update on the Elliott wave update for the NASDAQ 100 index, the future, the NQ, for today, Monday, March 8th, 2021. We continue to count a decline, that it's going to be a primary level decline to complete it's actually a cycle level decline, and we're counting into the primary waves to complete the cycle. In any case, we're in the beginning stages of this, and we're in the A wave down. And within that, I am at present counting it as if it's going to develop into a 5-wave structure down to complete primary wave A. So that would suggest that we're now tracking 5 waves of intermediate degree. And you can see here, they're labeled in yellow. So the low that we saw last week was intermediate wave 1, ensuing rally after, which is an ABC, intermediate wave 2. And now we have begun to drop in an intermediate 3rd wave, which of course is also subdividing as it should. Again, emphasizing 3rd waves, wherever they come within the sequence, are going to be the longest and the strongest segment in a 5-wave pattern. So we're in the beginning stages, and you can see that it is beginning to accelerate. It is becoming it's extended in terms of that the first minor wave subdivided twice. And that's great, because this is supposed to be the longest and the strongest wave. So within that count, we have now counted primary wave 1. And now I want to really introduce you to what I'm hoping is going to turn out to be a perfect ABC structure up for for minor wave 2. And that's occurring right now. This is where we basically left it off, that this is where the market was. And as I was making the update yesterday afternoon during the Globex session, it had started to drop. Well, it dropped all the way down, rallied up, and this is where we basically started this morning when the US opened, and then just proceeded to decline, and not making a new low, but did put in a fairly solid low below 0.70, 70.5% retracement level. Stopped and now has rallied. So I've labeled that as minute wave A, minute wave B, and now we are in that C wave up, which is going to be a 5-wave structure. So we are now looking for a 5-wave rally up in the context of this ongoing corrective pattern, which is an ABC. So we're looking for a C wave. And the first point to look or to mark on a chart would be that the C wave will be equal in length to the A wave. This A wave was 554 points. We're going to add that to what we're now assuming is the bottom of the B wave, which was on this afternoon's closing low, basically, at 12,881. I believe that's what that is. 12,281, almost 82. And we get 12,835 would be the first where I would think there could be, that's the point where this wave can complete, can be done. And as I look at my hourly chart, squared on the nose sits the 200-day moving average, which has provided resistance for the rallies thus far. Popped over that, came back, popped again, and then died. So we haven't had any significant breaks above the 200-day moving average, which continues to lean us towards that this is a corrective, and there's additional decline to happen. And we continue to use the 50-day moving average, the 20-day, and then I use the yellow, which is an 8-day. There's another one there, but it works on the hourly in terms of intraday trend, but right now I won't go below the 8-day. But these will continue to help us, particularly the 8 and the 20 and the 50 for intraday. Tomorrow, I would be looking for a break above that 50-day moving average at 12,508. That's where it stands right now. I would look for a clean break above that, and I would look for a continued rally. Again, 5 waves. But it's going to look something like this A wave. It wouldn't surprise me. In fact, it would be great, but you can already see it's gone up, it's gone down. So right now, it's really only done 3 waves. Let me take this down, so this is going to make life a lot easier, and we can take a look at it. You can see it here. Basically, it's done 3, and I need it to go further. Right now, it's looking very promising as it gets ready to cross over the 200-day on a 5-minute chart. We still have it up here on the hourly chart. But it looks pretty good right now that we should get this. Indeed, this would make this classic, beautiful B wave. And this is what I've been talking about when I talk about that a B wave can be deceptive. A B wave can be deceiving because you think we're going, and it just kind of stops and reverses, and does it with strength as it did here. It came off and some pretty good strength, stopped on a dime, started to go up. You know, it has its intervening declines, which work, but you can see that the overall pattern and the strength behind it with the vertical nature of the rise, that the switch has happened and the buyers are in control and they're going to take this. We did have some good calls in terms of, you know, intraday you could trade that and make good money, but also then being smart enough to stop shorting and go back long as it does this. So these are classic moves. They're clean. They're very representative of the structure that it's trying to put in. This is a C wave, and C waves can be very crushing. And again, this is a 5-minute C wave, but you can see that, and I'm sorry that I'm moving this mouse so much. You can see that it does just really zip straight down, and really that's the way it went this afternoon. When they decided that the sellers were moving in, the sellers moved in, and they were in control through the bell. Did that mean you can see that there's bits of green in between all of this? So yes, there were a lot of baskets moving in both directions, but the general direction was down and it was pretty obvious. So you had ample opportunity to scalp if that's what your game plan is, but also to use a technique that works very well. And this was shown to me by my trading buddy. And that basically is, you don't have to be all in, all out. You maybe can start with 2 contracts, and then you reach a profit level, you take one, it bounces higher, you re-add back to 2 contracts, and then you get your next leg. So it's add, take profit, add, take profit, add, take profit. So as you work your way lower. It's a good strategy and it works, and it keeps you engaged in the move and in the market. But this is a classic B wave. And it was so good to see it because I wanted to make sure that you could study it. So I'm bringing this to everybody's attention that if you pull it open on your chart, use a 5-minute, and you just see how beautiful, clean it is. And that makes it also very tradable because you recognize where you are. You're in a B wave. So B waves can do this. In fact, that's the B wave within the B wave. So it's like the 3 of 3. You're going to get all the tricks that a B wave can do. And we sure did. Lots of quick rallies, lots of steep declines, and a push and a rally. And so it was very B wave. But if you just traded what was in front of you, it was very profitable as well. Now, maybe you didn't get the top tick or even close to the top, but you got to play in there and you got to make some money. And you wait for your next point. But the fact remains that it was very tradable and very profitable. So what we're going to be looking for tomorrow, we're going to be looking for a continued rally. Again, I did have some, let me go back out to the other chart and let me throw some fibs on this one for us. We're going to do a Fibonacci sequence and we're going to do it from there. And we're going to put it up to there. We're going to bring it down to this B wave. So you can see I'm a little off somewhere because this should be 12. Well, we can see that 100% is, this is telling us 100% is, because that's too low. At 12,824, and our number is 12,835. So still all really working out right into there. But here's some other Fibonacci levels you can see. So we really need to see this thing break above this 382 level. Might take a little break right here, depending on where that 50 will be as the market continues to rally. So it needs to break above that. It needs to kind of hold above. It's barely just sitting right on the 20 right now on the hourly. So, but these are the expectations. It'll pause, it'll come up, but we need to see it start to break that resistance until it gets up towards its target. So as it does, if it breaks with strength above here, then you know that this is your next target. If it breaks with strength, this is the next target. If it breaks with strength, you're gonna really, you should fly very quickly to the end point. There's very little now in between here. So we should fly up to here and then you're gonna run head on into the 200-day moving average. That would be an end point, and then the next decline should begin. Now, what is the next decline? This is a minor wave 2 that we're completing. So it's minor wave 3 of intermediate wave 3. It's the magic moment. It's the 3 of 3. And, you know, there are so many times people say, well, what's going to trigger it? Why is it going to happen? And I often have asked that same question. But let me tell you, I see it on Elliott. If somebody says, what's going to cause it? It's like, I don't know. I don't know. We have to trade what's in front of us. And that means it's going to be, if it's going to be news driven, it's going to happen right there. And then we'll know. But this is what the chart pattern, the Elliott wave count, the Fibonacci sequence, it's all pointing. Once it reaches this level, it begins to point to the market turning again. And if that indeed, that 200-day moving average might be breached, could be breached even twice, but you can see what happens. So it really has to break and close. Each one of these cases, here and here, it closed above, and that's why it held. And then the sellers moved in. So the close was, again, back below. It took a while, but there was a lot of not much activity and you know, small trades. We'll look for that here. And then I'm looking for it to decline, and then I'm looking for that decline to begin to accelerate. So you're going to pay attention to these exact same Fibonacci levels. When they start to break, that's just going to give more strength that the next move is up, and then we can take those fibs down and start putting up larger fibs that are going to show us where wave 3 could end up. And that's where I'm going to leave it right now. Good trading for everybody tomorrow. Follow your plan, follow your charts, and good trading. Next update will be tomorrow.